Hello traders, Steve Ribble with Trader Tax Coach here with some advice on how to protect your trader status with the IRS. There's been a recent trader tax case that just came through the tax courts, and I wanted to make you aware of it because it highlights several key areas that the IRS looks at in order for you to maintain your trader status. So let's review this case. This is Hernicus Vanderlee versus the Commissioner, Tax Court Memo 2011-234. Some background on Mr. Vanderlee. He was a trader for several investment banks. He worked at Morgan Stanley, Goldman Sachs, and Merrill Lynch, and he started trading his own account in 2002. When his CPA filed his taxes, he actually claimed trader status for tax year 2002. He claimed mark-to-market losses of almost $1.4 million, and he claimed about $92,000 in business expenses on his Schedule C. He received an IRS deficiency notice of about $620,000 and an additional $7,600 of accuracy-related penalties from the IRS. What the IRS did was reclassify his losses as capital losses and disallowed the claimed business expenses. The tax court reviewed the case and actually agreed with the IRS. So why did Mr. Vanderlee lose his trader status? Here are the reasons the IRS cited. Mr. Vanderlee did not put a mark-to-market election attached to his 2002 tax return. He only made 159 trades in 2002, 41 of which were option trades. His holding period also worked against him. 35 sales of that 159 were from stocks that were bought prior to 2002. No security was ever bought and sold on the same day, so the IRS and the tax courts ruled that he was looking for appreciation and not looking to take advantage of market swings. Also, his frequency of trading was very sporadic. He only averaged about 4 to 8 trades a month. Most of his activity came in 3 months, May, June, and December. And I gotta believe December came for tax loss selling reasons. So the result of the tax court, the court ruled that Mr. Vanderlee was an investor, not a trader, and they reclassified the $1.4 million loss as a capital loss, only allowing him to take $3,000 deduction on his Form 1040. They also, because he wasn't viewed as a trader of securities, they disallowed all the business expenses on the Schedule C. Investors cannot deduct business expenses on Schedule C. So, the end result, Mr. Vanderlee now owes the IRS $620,000 in back taxes plus interest plus $7,600 in accuracy-related penalties. Very dire situation for Mr. Vanderlee. My caution for traders out there, do you think that Mr. Vanderlee had a high-priced CPA prepare his taxes? I'm willing to bet he did, given the income level of Mr. Vanderlee. What my coaching tip for you is trader taxation is a very specialized area. Caution you on working with an expert. You need to find somebody such as us here at Trader Tax Coach who is an expert in this area and knows what they're doing. Otherwise, you could wind up like Mr. Vanderlee. So, are you a trader or are you an investor? Let's take a look at specific things from this case and highlight how you can audit-proof your trader status in the eyes of the IRS. What the IRS looks for. First of all, it's important to know that they don't offer any clear definition. It hasn't been defined in the Internal Revenue Code or in any tax regulations from the IRS. What we do know for trader status, we actually get from trader court cases, such as the ones that I've listed up here, the most recently being the one that we just talked about, Mr. Vanderlee, here in 2011. Here's what the IRS says, and this comes from IRS Tax Topics 429, and I've put the link up there if you want to click on it. For a trader in securities, 3 main things that the IRS looks for. You must seek to profit from daily market movements in the prices of securities and not from dividends, interest, or capital appreciation. Mr. Vanderlee failed this test as he was looking more at capital appreciation and not looking at taking advantage of market swings. His activity must be substantial. Again, Mr. Vanderlee failed this test with only 159 trades for the entire year. And you must carry on the activity with continuity and regularity. And the third thing Mr. Vanderlee failed on, as he only averaged about 4 to 8 trades a month. So what do they look for? Typical holding periods for securities bought and sold. They're going to look at the frequency and dollar amount of the trades that you've made during the year. They look at the extent that you pursue this activity to produce income for a livelihood, and they look at the amount of time you devote to this activity. Those are the 4 key criteria that you need to take away from today's presentation. Miss one of those 4 and you could end up like Mr. Vanderlee, and you'll be taxed as an investor, not as a trader. That means you lose your home office deduction. You lose investment seminar deductions. Your margin interest cannot exceed investment income. Your excess actually gets carried forward, whereas a trader in securities can take the full deduction of his margin interest. Your allowed expenses will go on a Schedule A, subject to 2% of your adjusted gross income. You will be subject to wash sale rules, and you cannot use mark-to-market Section 475 accounting in your trading business, as Mr. Vanderlee found out. So here's some general guidelines from Trader Tax Coach. You should have a substantial portion of your liquid net worth trading the market. You should have weekly buys and sells, daily being the best. You should have a substantial number of buys and sells spread throughout the year. That's the consistency and the continuity that the IRS is looking for. If you're in the 100 to 200 range, it's very tough for you to hold your trader status. And as a coaching tip, generally 500 plus trades for the year, you're generally safe in that situation. Your typical holding period under a month, weekly and daily even better. So you're going to have a high frequency of turnover in your trading account. You spend a substantial amount of time watching and trading the markets, 3 hours a day minimum. We always encourage traders to keep a time log. There's going to be times that you don't trade because of setups. But if you're still there researching and reviewing, keep a time log so that you can have that to fall back upon in case of an audit. Maintain a business-like operation. Keep good books and records for your trading business. And this gets back to the time log, and it gets back to a trading journal. Keep these things so that you have written backup that you were studying the markets, that you were in the markets. Maybe you didn't trade because of XYZ, but you've got that to fall back upon. So the question I also get is, how do you elect trader status? So just to take you through a couple things here, there is no formal election for trader status. You don't need to check a box. You don't need to send anything into the IRS saying that you are now a trader in securities. You can claim trader status for 2011 if you've traded last year, and you can also go back and claim for 2008 through 2010. You can go back and amend the last 3 years' worth of tax returns if you were indeed trading and met the requirements that we talked about prior. You can file amended returns, include your expenses on a Schedule C, and be able to get deductions back, or be able to get refunds back from tax money that you've already paid. Not sure if you qualify for trader status? I've actually got a trader status evaluation up on our website at tradertaxcoach.net/trader_status, and it's right there, and this is what it looks like. Very important, if you want to fill this out, please make sure you put your name, email address, and phone number so I've got a means to get back with you. We've had some people out there that have filled this out, but they did not put their name and contact information in there, and there's no way for me to know who you are or how to get in touch with you to review your trader status with you. So please make sure you put that stuff in there. This is where it is. I'll take you to the website real quick. You go to Trader Tax Coach. It's under Trader Status, and if you scroll down here, are you a trader? You will see the Trader Status Evaluation. Fill that out, hit Submit, and I will review that for free and get back with you to let you know where you stand as far as being able to claim Trader Status. So what are the benefits of Trader Status? Tax deductions. It all comes down to tax deductions. Being able to deduct these as a business expense is huge. You're going to be able to deduct chat room subscriptions, data feeds like DTIQ, DTN Market Access, software subscriptions like Investor RT or Market Delta or other charting software that you use, newsletters, newspapers, Wall Street Journal, Investment Business Daily, any trading books and publications you'll be able to deduct. If you've got a separate business line, you're going to be able to take that as an expense. Internet internet for your trading business, any seminars that you've gone to for educational purposes, you'll be able to deduct those costs, including transportation and lodging. Any wages paid to family members, such as a spouse or a child that you hire in to do data entry or other work for you, you're going to be able to deduct those. Rent if you lease a space, or home office deduction if you don't lease a space. Cable fees, computer and office supplies. You got depreciation on all fixed assets used in your trading business, Section 179 expenses for monitors and computers, et cetera, et cetera. Margin interest goes dollar for dollar on your Schedule C. Be able to deduct legal fees, medical reimbursement plans, and tax preparation and tax advice, such as with Trader Tax Coach. So there's a world of deductions that opens up for you when you're able to claim Trader Tax status. So that's the benefits. So what to do next? Well, I would encourage you, if you're unsure about where you stand, to fill out and submit the trader evaluation form. It's not too late to claim trader status for 2011, and that gets submitted on a Schedule C. And you can also go back and claim up to 3 years of tax returns and file amended returns to claim trader status if you met the activity requirements that we talked about previous. You don't need special forms or elections to do this. It all goes on a Schedule C, profit and loss from business. If you're considering making mark to market for 2012, if you make that election, now's the time to start thinking about it, and we can help you if you've got questions on that. And reach out to us at info@tradertaxcoach.net if you've got any questions on this video or any other trader tax topics. So how can we help you? I mentioned the free trader evaluation. We will review your previous 3 years worth of tax returns for free to make sure that they were done correctly. Mark-to-market election filing, entity consultations and formation. We offer payroll services, and being an accounting firm, we offer tax preparation for all different types of tax returns. One of the key things is tax planning and consultation. At Trader Tax Coach, we don't just take the data and input it and then spit out a tax return. We actually review everything and look for ways that you can proactively cut your tax bill to the IRS, the legal way. So that's something that we offer to all of our tax clients, is going through that tax return with a fine-tooth comb and making sure that you're doing the right things to minimize that tax to the IRS. Also, unlimited access. So when you work with us over at Trader Tax Coach, we are available for you anytime you need us. We don't bill extra for that. So if you've got tax questions or entity or company questions on your business entities, you can reach out to us, and we're going to make sure we get you the correct advice regarding that going forward. I will leave you with this. This is from Judge Learned Hand. He was a U.S. District Court judge. In America, there are two tax systems, one for the informed and one for the uninformed. Both systems are legal. Our goal here at Trader Tax Coach is to inform you on the right ways that you can go about reducing your tax bill. Hope you learned something today. I appreciate your time. Put my contact information up here. You can reach out to us at info@tradertaxcoach.net. You can see our website at tradertaxcoach.net. Also have my sister site at shrinkmytaxes.com. Trader Tax Coach is specifically for traders and securities. Shrink My Taxes is more of a general site for others out there. You can follow me on Twitter at Trader Tax Coach or at Shrink My Taxes. Have a good day. We'll talk to you soon.